Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video I'm going to share with you guys one of the companies that in my portfolio that I've sold, another one that's brand new company that I've added to the portfolio, and then of course we will be buying that company towards the end of the video. So I've not purchased that one yet. I do have some money basically on the account right now. As you can see, there's over £1,600 in here that we will be spending inshallah before the end of the video, so stay tuned for that. Now if you are new to my channel, one of the things I love to do is pick different dividend companies, but mainly focus on high quality businesses. Now of course I will make mistakes. I do have some companies that are just dividend paying companies, and they are in the portfolio for that reason, just to pay me some dividends. And we also have some growth companies. Right now, as you can see, I've got 26 different companies. So sometimes these companies go too far, and what I'm trying to do is keep every single company maybe at least a 5 to 6%, just the overall portfolio. I don't want any companies to be 10%, 15% on my portfolio. So that takes a lot of time to manage and so on, and that's why it's probably easier if you are new to basically investing to actually just do ETFs, because the ETFs, you don't have to worry about that. Someone else will do that. You just have to pay the expense ratio and just relax and just dollar cost average every single month. Whereas what I'm doing now is basically rebalancing my own portfolio whenever I get the chance. And what I've done today is I've trimmed Qualcomm. Qualcomm, as you know, if you watched my last two videos in basically yesterday's videos, you would have noticed that Qualcomm was one of my biggest holdings. And right now it's actually 4.8%. And the reason I've done that is because there's nothing wrong with the company. It's doing really good. The financials look really good. Basically, all the Wall Street analysts are saying great things about the company, and majority of them have increased their expectations for this company for the next few years. Now, for me, that's absolutely great news, but at the same time, I want to take some profit off the table, and that's exactly what I've done. So right now, I do own 30 shares instead of the 40 that I had initially. And I will show that with you guys just to show you how much actually I've sold of this company. So I've sold 10 shares and I made over £600 in terms of profit. So for me, I'm not even interested just the profit. It's the fact that it's gone too far. I've made some profit. I'm going to take that money and basically use that money for another company, inshallah. And that's exactly what we're going to do now. Okay, so the company that I want to talk about today that I will be adding to the portfolio is this company called Salesforce. I had Salesforce before in this portfolio, and I was, I sold it at a time where technology companies were not doing great. I have too many tech companies in the portfolio. I had this company, I had Adobe, I had the Microsoft and so on, Broadcom and so on. So there were so many companies that are in technology basically sector, and it was becoming just too much. Because remember, I'm also trying to manage the sectors as well as individual companies. So I sold at that time, and I don't regret it, to be honest with you, because it was, I think it's about 180ish. I think it was 100, maybe 100, not 180s. Yeah, 180, 190. I think that's what it was when I sold it. It doesn't matter. The point I'm trying to make is I used to own this company in my portfolio, and of course I do I do follow it a lot. So what I'm going to do now is I'm going to show you exactly why on earth this company is down 20%, and you will be shocked. Okay, now this is one of the things that this is what the company has reported. So I'm going to highlight some of the most important part, and you'll see that total revenue, okay, is up about 11% year over year. Okay, so you're looking at basically this time last year what they reported in comparison to that, they're up about 11%. The subscription and support revenues up 12%. Okay, the current remaining performance obligations, which is basically their kind of contract, if you like, is up about 10%. Total remaining obligations, so on, is up about 15%. So operating cash flow here is also up about 39%. So when you look at these things, you're like, okay, is this company lying? Is there something that I'm missing? And then of course you look at what these websites are reporting. Yes, they missed the expectations for in terms of revenue side of it, although they beat year over year, which is really good, about 11% growth. But what they were expected to report was basically it was 20 million shorter than what they were meant to report. And for that reason, the stock went down. So that's the first thing. Subscription, we've already seen that's basically 12% up. Now let me show you the charts, okay, and you will see this, okay. So if we look at the charts, you can see the revenue by segment. So the subscription and support, we've already seen that's about 12% up year over year. Quarterly, it was done down 2%. Okay, this time quarter over quarter basically is down quite a bit. Sales, and sorry, about 2%. When it comes to the sales side of it, 10% up. When it comes to service side of it, 11% up. So when you look at these charts, you'll think, okay, there's absolutely nothing wrong with it. Total subscription and support revenue, okay, is heading absolutely the right direction. Okay, so there's a tiny bit of basically down basically this time, basically from last quarter. Now, in terms of, remember, this company is a global company. They, of course, the subscription, when it comes to their software, is used all around the world. So in Americas, for example, it was about almost 11% up year over year. In terms of Europe, almost 10%. And in terms of Asia Pacific, it's actually almost 14% up. So genuinely, there was nothing huge to report other than the fact that they guided slightly lower than what they were meant to. Okay, so this is one of the major things that, one of the main reasons why the stock's done a lot. And check this out. Okay, so initiated second quarter fiscal year 2025, because they've already started their fiscal year 2025 revenue guidance of 9.2 billion to 9.25. So that's the range. They're saying this is what we're going to do. Okay, the consensus from the Wall Street was this. This is what they were expecting, 9.34. Okay, that's basically what they were expecting. So it's slightly lower. The higher end of that number is slightly lower than this, and that's all it takes. That's genuinely all it took to bring this company down 20% in today's market. Now, it's wonderful when you see something like this, and if you know the business, if you know the company well enough, if you know the company is heading the right direction, in the long run, and you're not a day trader, you're not worried about what might happen this year or next year. We've seen this before. I can name so many companies. I think it was Air Product and Chemicals, if I remember correctly. When it reported, it was down so much. And when I looked at it at that time, I was wondering what on earth has the company done to go down that much. Since then, it actually bounced back. I think I was in the red for hundreds of pounds, and then it came back up, and it was absolutely fine. So these things will change, okay? But the fundamentals of the business are still intact. The company is still making profit, okay? They're heading the right direction. And the fact that, with AI and everything else that's happening around us, some people might say, okay, software companies are a bit of a fragile moment at this point in time. But this is one of the companies that are pioneers of when it comes to AI and how AI is used in the workplaces. So we will see what happens. We will keep an eye on this situation. But what I'd like to do right now is, there's so many reports. If you scroll down here, you'll see some people, even including, actually, let me actually quickly show you this. Okay, the Morningstar has actually now guided slightly lower. So they're going to change this. Although that says 300, they're going to guide it slightly low, $285 per share. It's still higher than, of course, so basically than where it is today. So I really like the business. I like the business model. This is one of the high quality businesses out there. And I've always said to you guys, this, for me, this is the, when it comes to Microsoft, for example, the Microsoft of the future, I can see this company becoming that in the long run. So for now, again, please don't just take my word for it. Just do your own research and so on. But what I'm going to do is, now I've trimmed, of course, like I showed you earlier, I've sold 10 shares of this company, and I will be buying Qualcomm today, basically Salesforce today. So I'm going to buy 5 shares of this company. That will cost me £850, and I'm going to dollar cost average into it. Now, just wanted to admit with me also, I do own this company in the family portfolio, and I've actually averaged it down today, and I'm going to share that with the community. If you're interested, have a look at that as well. So I do own this stock already in my portfolio. So just to be also a bit more transparent than the usual when it comes to the family portfolio. Anyway, I'm going to buy 5, okay, send that to the market, and I'm going to dollar cost average into this stock moving forward, inshallah, because I genuinely think it's a great company moving forward. I will be buying more of this company week after week if it continues keeps going down. And again, it's one of those companies that could potentially be, going down even furthermore in the next few weeks. And if it does, I'm going to go all cost average. In fact, it will be really good if it goes down below 200. I would really like that. But in the last 3 months, it's actually down 27%, which is a lot. So, but of course, in the long run, if you look at, for example, if you look at for the 1 year, it's flat. It's actually done nothing. For a year to date, it's absolutely done nothing. For the last 6 months, it's about 5%. Now, according to Wall Street, okay, you've got 22 strong buys, 9 buys, 10 holds, 12 holds, and then 1 sell. And their price target is about 45% upside from where we are, 300 something. Okay, and you've already seen here that they actually expecting about $285 per share is where they think the price should be. So I'm really happy with the company. I love the fact that it has come down quite a bit. A lot of the technology companies actually has come down. A lot of the software companies. ServiceNow is another company that has come down quite a bit. Really like the business. Very similar to CRM. But we'll see what happens. Intuit is actually come down quite a bit, but again, I'm still in the green, so but not by much. Okay, I think it's tiny bit. There we go. It's about 2%. So I really like this. If it hits around maybe 250, what's my average actually? 546. Okay, so if it comes down to maybe 540. Okay, which is not far off. Okay, 540. That would be really good, inshallah. Then I can start buying more of this company as well. Anyway. That's what I wanted to share with you guys today. Again, as always, please do your research, find out more information. There's a lot more information in here. Even with the free cash flow, by the way, this company's free cash flow has actually increased, okay, from where it was last time, last quarter. So I really like that. There we go. There's the free cash flow there. So physical first basically quarter of 2025 has actually gone up about 43% free cash flow. Just absolutely amazing. I love that type of business. And again, when it comes to the actual revenue, this is one of the reasons I really like the software companies, because look at this here. Okay, so that's the total revenue, that's the cost of the revenue, so how much it actually basically how much they need to spend it to make this. Okay, but look at this gross profit, absolutely amazing. They're making 34, let's call it $35 billion, but right now, okay, right now it's actually they're just spending about $8 billion to make that. It's absolutely amazing. But of course, there's a lot of expenses and so on. And then when you always have to check the net income, basically how much of that basically is floating straight into the net income. And in this situation, it's about $4 billion. So they're burning quite a lot. But however, the company is actually becoming way better with this sort of a thing, because they are now they're not actually acquiring other businesses and so on. So when it comes to expenditure, they're actually becoming better at it. So we'll see what happens anyway in the near future. Like I've always said to you guys, do your own research. I bought 5 shares. I will continue buying a little bit here and there wherever I get the chance, inshallah. I like the business and I'm going to hold on to this for a while now, because I've actually learned my lesson and I've actually liked the business even better now. Last time when I talked about this, one of the reasons I actually sold it was basically Mark Benioff, who's the CEO of the company and the founder, was becoming a bit more like a celebrity, like a Elon Musk, rather than focusing on the business. And since then, they've had a couple of and active investors who were actually basically trying to make a change for the business, and since then it has actually worked for them. So hopefully we'll see what happens. But I've basically owned 5 shares on this portfolio, own other shares on the other portfolio as well. If you'd like to check that out, come to the Patreon account where you get access to basically a lot of things, including the buys and sells and so on. Anyway, have a wonderful day. Assalamu Alaikum.